Thanks so much for joining us today. We are here with my top lenders asking top questions we get asked. We have good old Brett Baird and good old Mike Hennevan here with us today. All right, guys, here's the question we have. What is a lender credit and when is it given?
Lender credit. Typically a lender credit comes about from us giving a little bit higher of an interest rate in exchange for giving the client money. Let's say, for example, a client needs $5,000 to close their mortgage for down payment, or excuse me, for closing costs and impounds, and they can only come up with $2,500. And let's say, for argument's sake, that the base interest rate is 4%. So if we give them a little bit of a higher interest rate, it could be anywhere from, depending on whether it's a conventional or FHA loan, let's call it a 1/4% interest rate. For them paying a 1/4% higher in their interest rate, we can then credit them funds at closing towards their closing costs to bring out their out-of-pocket expense down.
Yeah, so you get to select maybe between one of 4 different rates.
Yeah. And
then the lower the rate, the less lender credit or more points you pay. The higher the rate, the more lender credit you're going to get. So there's reasons to do it and reasons not to do it.
And it also kind of feeds into discount points. Let's say someone has some extra cash and the base rate is 4% and they really are dying for a 3.75%. They might pay an extra % or 1.5%, whatever it may be that day, however the market's looking, to the lender at closing to obtain the lower interest rate.
Cool, thanks guys.
Thank you.
Thank you.
Is that you?
Someone's calling for interest rates right now. But an adjustable rate mortgage just means you're in a fixed loan for a certain period of time. So if you're in like a 5-1 or 5-year ARM, you have a fixed rate for 5 years, and after that 5th year, you can go into an adjustment period. You're going to pay your monthly payment, and you're going to pay your principal, interest, taxes, and insurance every single month.